Greetings to everyone. In this video, we're going to introduce the International Strategic Planning, data review, and final resolution for our company UNAD 25070. The members of the group are Juliet, Johan Sebastian, Mariana Buitrago, Paula Valeria, and myself, Gloria Romero.
Hi everyone, this video is give a key overview of the finance analysis based on the key statement, the balance sheet, the income statement, and the cash flow statement. First, the balance sheet shows the company's financial position and the specific moment. Here we analyze the liabilities and a key to understand liquid solvency and the overall stability of the business. Second, the income statement, also called the profit and loss statement, helps us evaluate performance over a period. We look at revenue, expense, and net profit to determine where the company is and how efficient they are in operating. Finally, the cash flow statement reveals how cash moves is an all of the company in operating, investing, and financing activities. A business generate enough cash to sustain its future growth. Together, the statement gives us a complete view of financial health, helping us make informed and strengthened decisions.
Competition by products and markets. As we can see in the two tables above, our company has become a leader in profitability because we have achieved the highest net profit and also obtained the best ROA. For sales, we reached the second highest result in all the market, and we also have the highest investment level in R&D and in advertisement investment. For our weaknesses, we notice a need in liquidity where our liquidity ratio is the lowest for all the markets in ubicated in 0.29, and however our financial security index is 1.34. According to this, our currently need is to improve our liquidity in order to achieve a long-term stability. Competition between companies by products and market in Europe and North America. First, for the multi-station in Europe, we noticed that we hold 4.9% market share, where we sold 13,000 units. And here we are below two companies that are UNAD 25071 and UNAD 25075, keeping us in the third position in this segment. Second, for the exercise bike, we have a market share of 80.2%, while the leader, that is UNAD 25071, holds 27.4% of market share. Here for this product, we are located in the third place of the better competitors. Uh, Third, for the treat meals, we are the second competitor in below to the other companies, where we hold 80.2% market share and we sold 80,000 units. Finally, for North America, for the product of elliptical trainers, we noticed that this is our star product, where we are the first competitor, where we dominate the market with 19% market share and 5,600 units sold. This result is thanks to our price of $1,169, that is below to the comparage average price in $1,209.
In this stage, our results in evaluation, management, production, and human resource reflect the impact of our strategy decisions. In product innovation, we invested 300,000 in the multi-station, 200,000 in the stationary bike, 600,000 in the treadmill, and 400,000 in the elliptical trainer. This investment strengthened our product differentiation and boosted our competitiveness, especially in North America. However, they also significantly increased R&D costs, adding financial pressure and reduced operating cash flow. Our efficiency improvement initiatives include 400,000 in human resource efficiency and 400,000 in machinery efficiency. This decision helped reduce production costs and improve long-term productivity. Overall, these results show a balance between competitive growth and strong financial management.
I will continue with the marketing results, needs, and availability. Decision name, decisions impact on the company. Prices multi-station 843 Europe. Stationary bike 421 Europe. Treadmill 1138 Europe. Elliptical trainer 1169 North America. Comparative pricing in Europe boosted sales, especially for products with reduced prices. However, margins decline, limiting our net profit growth. Quality control, multi-station 4%, stationary bike 3%, treadmill 8%, elliptical trainer 7%. The control percentages we apply helps maintain acceptable standards and avoid returns. However, products with higher controls 7-8% generate additional costs that increase or operating expense decisions. Impact on the company campaigns. Multi-station maintaining a traditional corporate image. Stationary bike maintaining a traditional corporate image. Treadmill maintaining a traditional corporate image. Elliptical trainer maintaining a creative corporate image. The campaigns maintain brand visibility as planned and facilitate entry into the new North American market. However, their conservative approach, with the exception of elliptical trainers, somewhat limited our market share growth and generate more costs than benefits. Media planning, multi-station 200,000 Europe, stationary by 108,000 Europe, treadmill 260,000 Europe, elliptical trainer 230,000 North America. Investments in media strengthened our product presence and contributed to a significant increase in sales. However, they also substantially increased expenses, which impacted the financial results and liquidity for this period. Machinery hours availability. It appears the company has sufficient machinery as the required hours do not exceed those available. However, acquiring more production machinery will be advisable given the small deviation. Availability of raw materials. It has been observed that raw materials need to be reordered, although it should be noted that there are 14,795 finished units of the multi-station product and 6,742 finished units of the stationary bike product in stock. It is essential to monitor stock levels to avoid unnecessary raw material orders.
Conclusions and strategies to follow. Our strategies, the company for strong international growth by combination innovation across learning, ship and operational efficiencies. The launch of the new elliptical bicycle in North America, along with the strength behind of the core products in Europe, supports a total sales target of 51,007 units. Strategies investing in innovation did 1.5 million euros efficiency in 18,000 units distortions marketing and customer service ensures and sold market penetration and brand visibility. Wide the hairs and improved operational capacity, the company is prepared to achieve sustainable, competitive, and a long-term growth and all target markets. Thank you for attention.